Time for FOMO, and today looking at a name that gets its fair share of coverage and love, I would say, and that's Tesla.
That is Tesla. I feel like it wouldn't be a day in the markets if I didn't talk about Tesla. So we did get some news today fueling its nice move higher. Now, we did see shares lower yesterday and Friday, which broke its best streak in nearly 7 months. So I don't want to discount the fact that Tesla shares are up about 98% from their yearly low and up a whopping 64% this year, up just shy of 5% today. But they did update the prices for their Model Y performance crossover and their Model 3 rear drive vehicle per the company's website. The Model Y crossover is now selling for an increase of about $1,000, just around $59,000 a vehicle, while the price tag for their Model 3 car, which actually showed a $500 reduction, just around $43,000, all per the company's website. Both vehicles do still qualify for that key $7,500 tax credit that is very important right now, but we did also get confirmations of the first batch of Model Y and Model 3 deliveries in Thailand on Tuesday, as we saw pictures posted from the company's account via Twitter. The first batch of roughly 2,000 Model 3s and Model Ys was spotted back in January, so now we've seen delivery go through, which is another huge win for the company, now expanding into different markets. The other headline today that is, I'd say, a little bit non-Tesla specific, but still obviously important, is the fact that Tesla employees in New York have launched an effort to unionize with the Workers United Update New York Union. Employees at Tesla's Buffalo factory allegedly reached out to Elon Musk, expressing their intention to organize a union to obtain better pay and job security, as a reduction in production has pressured Tesla employees. I also had to mention this, Alex, because I thought this was so interesting. We also got a report from Cars.com that said manufacturers saw a boost in EVs tied to Super Bowl ads, whereas Tesla had no Super Bowl ads, also still got a lift from the presence of EVs. Was actually saying that GM and Netflix's commercial led to a boost in Tesla searches, not necessarily GM, which I think just speaks to the fact that this is coined as the electric vehicle of the nation. Not a bad place to be. Tesla, of course, has its critics, but hard to argue with its price action this year.
Yeah, no doubt. Ford obviously having some notable struggles today as well, kind of highlighting that, hey, it's not that easy to do what Tesla has done already. It's way ahead of its peers in this space right now. But also, it's got a long ways to go to get back to the levels that it was prior to this tremendous sell-off that we saw towards the end of last year, where the stock cratered over 75% from its all-time highs. It was resilient for a long time, Jenny, but it finally gave way, just like the overall market. It did ultimately sell off. It has made a nice recovery, about doubling off those lows. Still a pretty important player, no doubt, both from a market sentiment standpoint, but also a movement towards alternative energy. Maybe an argument could be made that it's a fairer price here than it was at its all-time high. But tons of volatility here, Jenny, still is always the game when you're talking about a name that is traded 150 million shares, and it's barely lunchtime.
I mean, the volatility and the volume in this name is absolutely ridiculous. And I was reading this interesting statistic that said over the last decade, Tesla's revenue is up a whopping 20,000%. GM's is up just over 3%, and Ford's is up 18%. So sometimes it is unclear the valuation, how it is valued so much higher than these companies. But I guess the valuation is perceived so much on the growth story of Tesla, which I guess then the bears would say, you know, betting on growth isn't necessarily betting on the actual numbers. But I do just think right now we've seen a lot of headlines that seem to be going in Tesla's favor, whereas really to kick off the year, it was quite the opposite.
Well, I think you're highlighting a key point. I think that both bears and Tesla make pretty strong points at times, and I think bulls make strong points at times. But the one thing that makes it very difficult, and this is really the crux of the difference, is Tesla a car company or is it something more? Because it can be growing faster, but we know the addressable market for cars. So at one point, Tesla was worth more than every other existing car company combined. Well, unless there's just suddenly a new need for more vehicles than we already had, how would that make sense for it just to be a car company? So if you're a bear, that would be your argument. In the case of those who are believers in Tesla as revolutionizing alternative energy and energy storage in capacities beyond just electric vehicles, well, that would be your explanation. And so far through the years, I know Elon Musk and the team at Tesla and the other businesses that he runs have made some kind of lofty projections for what they're going to achieve, but you look back at all the years and all the milestones that Tesla has crossed that so many critics said would not be possible, you start to become a believer. And so that's really been the key thing, is they've rounded so many of those checkpoints and done so in timelines that doubters said would not be done. It continues to breed that optimism. But this is as much a trading vehicle as it is a long-term story. And so ultimately, when it comes to talking Tesla, it's hard to really get into the depths without just looking at the volatility and just in awe at times.
I completely agree. And I think this is one of those stories, if you followed closely like we have, you do sort of believe in Elon Musk because he's proven the doubters wrong so many times. And I think, forget about the Twitter involvement. I just really look at what Tesla's been doing lately. But Alex, we do have this Investor Day on March 1st, which is going to be, I'm sure, a day of volatility that we see leading into that event. Earnings behind us now. But what are you thinking for an example trade? Because there's a lot of promises, I will say, around this March 1st event. Elon Musk himself has been tweeting, big expectations for March 1st.
Yeah, and with that event on the horizon, you're going to see elevated volatility in the dates that capture that event. And so I wanted to utilize that, and maybe it can be inducing a volatility to the downside. Maybe it could spur volatility to the upside. And of course, there's always a chance that maybe it's sort of nothing. Unlikely maybe in the case of Tesla, but certainly possible. Looked at some going out to the March monthlies, selling a put vertical below the market, about 12.5% below the market, the 175, 170 put vertical. $1.25 credit or thereabouts. If you did get a $1.25 credit on this trade illustration, it creates a 3-to-1 risk reward ratio in which we're risking $375 to make $125. Break even would be $173.75. And max possible profit, again, $125 plus the transaction fees. Risk profile is fairly straightforward if you're looking at it. Elongated Z. The key distinction here versus some of the other vertical spreads that we looked at is we're starting in the max profitability zone, Jenny. We need the stock to sell off over 10% below 175 before that picture gets a little bit cloudier. And of course, below 170 is the max loss territory where you'd anticipate through expiration these would go through the assignment and exercise process and offset for max loss. But stay above 175, watch these expire. If that's what happens, max profit is what would be the outcome in that case.
And it's wild to me that you say, the stock would obviously have to sell off 10% just to reach our strikes, because right now the year-to-date low is around 101 a share, which just shows the volatility we've seen in Tesla this year, now trading over $200 a share, which is making the bulls very happy. But that does it for our FOMO segment today.